on YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I had to squeeze in a video today. Good Friday, Easter Saturday, that might be difficult. I may do a quick shorts video for you guys. Easter Sunday, I'm actually going to do a video. I have family here. I'm going to try to squeeze in a video. As you can tell, I have ate amazing Italian food right now, a local place in Akron. Don Tino's restaurant. If you guys are from Summit County, Don Tino's is so good. I had their veal and linguine and stuff. Oh, so good. So let me just be very straightforward with you. When I was on that space, we discussed things other than synthetic calls. And now they have some things that are a little bit more diversified that grab my attention. And I'm going to explain to you why this one is on my radar. Because there's some things with Realty Income that have issues. And guess what? Realty Income is in this ETF, so we'll go over that. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check out RNTY right now. This is brand new, so I'm really not going to go over a price. The symbol is RNTY ETF. So this is the Target 12 Real Estate Option Income ETF. It's an actively managed ETF that seeks a target annual income level of 12% and capital appreciation via direct investments in a select portfolio of real estate companies. Investing in the fund involves a high degree of risk. Due to its investment strategy, RNTY's exposure to gains, if any, of the share price returns of the underlying securities is capped. However, RNTY is subject to all potential losses if the shares of the underlying securities decrease in value, which may not be offset by the income received by RNTY. The one thing I'm going to bring up, I've been heavily going into REITs. I'm still buying REITs. I love REITs. Okay. I don't have time for real estate. I'm just being honest with you. I'm a travel nurse, starting as an NP. Don't get me wrong, I've been partying with friends and stuff since I just got a new nurse practitioner job that'll start in July. But I I need somebody to do the work for me. Okay, this is what YIELDMAX does. This is what Rex Shares does. This is what Curve Yield does. And this is what many, NEOS, okay? So the thing about YIELDMAX, and I did bring this up in the space, diversification. So I honestly think, and Jay and Mike can correct me if I'm wrong, or they can even next space or anything, they're going to still be competitive with these competitors, with the other ETFs. So having a specific, and they got a lot of money, okay? They raised a lot of money. So they can be well diversified. And this one is really interesting because it's actively managed and it seeks a target annual income level of 12% capital appreciation via direct investments. Okay. The primary investment objective is to seek current income. Secondary is to seek capital appreciation. We're saying that a lot. The one thing is expense ratio 0.99%. But look at its holdings, okay? I own a lot of these holdings. And these are good ones. Extra Space Storage, that one's going up. Avalon Bay, that one's going up. Mid America Apartment Communities, that one's starting to go up. Realty Income, I have them. They've been down. Equity Residential, American Tower Corp, Well Tower, Prologis, yeah, I own them. Digital Realty Trust, Texas Pacific Land Corp. So that's their top 10 holdings. Let's go even further. I see Simon Properties Group, Public Storage at the Mid-American Atlantic. Iron Mountain, okay. Invitation Homes, guess what? I own them. See, what else do we have? Essex Property Trust, that's a good one. So they actually have a Crown Castle, CBRE. They got some good ones in there. So that's one thing that's promising. So we don't know what the distribution is going to be. Well, the first distribution in money or dividends, we don't know what it's going to be. But let's think about this because I have a 200 share challenge with Realty Income. I want to get to 200 shares. Okay, that's my goal by the end of the year. So let's jump to E-Trade. So I'm at 193 shares. I'm not going to round or anything. 193 with Realty Income right now. So I'm going to get to 200. Okay, it's down a little bit. That's attractive for me. 58.32. It looks like it's slowly going up. Look at Agree Realty Corporation, 79.04. That is a little expensive. Okay. And Arbor Realty Trust is down if you're looking at my portfolio. But 193 shares, which show, and I'll show you my estimated income with it. So estimated with Realty Income is $52.01. That's with 193 shares. And I'll show you how much it distributes right now. So going on their website, okay, they announced they declare their 658th consecutive stock monthly dividend. And it's 26, I'll just say almost 27 cents per share, representing an annualized amount of $3.22 per share, payable on May 15th, 2025. So let's look at that. It has Realty Income in it, and there's capital appreciation. And its goal, okay, is to get at 12%. That's what it said. And it has all these securities. It's a cover call ETF. Now, I posted a previous video with the NEOS ETF, and I'll put that in the comment section as well. With the NEOS ETF versus Realty Income, this could be another situation where, by the time it hits 50 cents with Realty Income, I'll be the age of Grandpa Simpson. So its dividend growth is really slow. But again, you have to worry about that 0.99 expense ratio. So that's one thing to look at. This could possibly be in my arsenal with monthly dividend distributions. So I wanted to be clear with you guys that this one is new and it's on my radar right now. And I'm going to study it closely, but the way Jay and Mike are innovative, they're not just doing synthetic calls, they're not just doing, inverse, okay, like CRSH and stuff. They're actually adapting, they're listening to us. They got the backing with the moolah to diversify. And I think this is a great thing for the YIELDMAX ETFs and the company. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I'm going to maybe try to squeeze in a shorts, maybe Saturday, maybe Friday. I can't guarantee that, but I'm going to have a video for you on Easter Sunday. So you got to subscribe to my channel for free content, free dividend investing strategies. And again, shouldn't be buying things because I do, but I'm very transparent with what I do, and I'm very honest. So take care and have a good one, and I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. My YouTube channel is not and should not be taken for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. Go to a financial advisor for financial advice and a tax advisor for tax advice. I've been telling you that all the time. You have to do your due diligence when it comes to investing. You can lose money. Look what's going on with the stock market. Be aware of the risks. I don't own any shares of this new ETF. I do own a lot of shares of Realty Income. I wanted to show you my transparency, but I wanted to show you also what could be added in my arsenal with earning passive income. Take care and have a great Thursday.